Thanks for tuning into this conversation with Shriram Properties. They came out with a decent quarter one, but more than that, there is there is a large block that has happened. Talk of one more block happening, and while all of that is going on, there are a bunch of things within the company that have happened. In that, ASK Property Fund has signed two projects with them. There's probably talk of some non-core assets being sold as well. So lots happening and lots to talk to. Murali Malayappan, he's the CMD of Shriram Properties, joins us right now on the show. Murali, great having you. Thank you for taking the time out and speaking to us.
Thank you, Neeraj. Thank you for hosting us.
Can I first start off with the core business? Because as per your presentation as well, I believe the 3-year earnings outlook, you're talking of some fairly strong numbers coming in largely from the volumes that have already been sold, and that there is a variety of developments that you're doing. So can you tell us how is business momentum looking?
If you look at the business, particularly, real estate can be looked at into several ways. One is post real estate, FDI was introduced in real estate, then Lehman crisis. The most important one is post demand, post RERA. Real estate has gone through serious changes of particularly post RERA and demonetization and GST introduction. It's a big consolidation phase. Last 6 years, India has been going through serious consolidation phase, which has resulted in segregating the large branded high quality developers vis-a-vis non-high quality developers. So India has gone through serious consolidation. My estimate is not more than 50-60 developers across the country contributing over 90% of the demand, And each city, not more than 10-15 people contributing to over 85 to 90% of the demand. So that's the consolidation story, which we have taken advantage of the market environment. We have achieved our growth in the last 4 years. We have been consistently growing from 3 to 3.5 to 3.84 million square feet. Next 3 years, we are looking at further growth in a very big scale. So we are looking at this year, FY24, close to 4.8 million square feet to 5.5 to potentially 7 million square feet in the next 3 years' time. That's a potential we see. You talked about the numbers. So we, migrated to India some time back. So India or most of the companies migrated to India. So based on whatever the performance has been done in the last 3-4 years' time, more than 2/3 of that gets resulted into P&L. So we have a very healthy P&L projections, or there is a good amount of predictability on P&L. Last year, FY23, we declared a profit of 68. Before that, we declared a PAT of 18 to 68 in FY23, and FY24 looking very, very bright. So again, more than 2/3 of the bottom line or revenues coming from the projects which are already sold in the last 3 years' time. So whatever we are doing now in FY24, maybe 1/3 will approximately contribute to this financial year. And next 2-3 years' time, whatever we are doing now will get contributed. So I'm seeing a very, very healthy growth potential for the next 3 years' time.
Sorry, so am I understanding you correctly? So despite the fact that when I looked at the numbers, FY19 you did about 650 crores, FY23 you did 674 crores in reported revenues. So it's not that the last 4 years you've done something dramatically high, but you still believe that over the next 3 years, you will nearly double your sales volume from whatever 3.5 odd million to 7 million, if I heard you correctly. And the contribution of the revenue to the bottom line, did I hear you say, would actually go up from where it is currently?
Absolutely. See, this India's method, whatever the construction completed, based on that, the top line gets reflected. So you will see now we have last 3 years' time, we have achieved 3 to 3.5 to 4 million square feet. So there has been a constant growth. Now this year we are looking at about 4.8. Ultimately, go to 7 million square feet in the next 3 years' time. That's a growth path we are looking at. All that will get captured in the top line. On bottom line, there has been a steady growth. So as I said, FY22 we are about 18 crores PAT, and FY23 is 68 crore PAT, and FY24 we are given guidance we should be close to about 117 crores PAT. And FY25 again there will be a reflection of the volumes what has been done. So there will be a significant growth which is expected in the next 3 years' time.
Okay. And 70% of the aggregate revenues will come in from the March volumes itself. Is that I read
Yeah,
it somewhere? Is that a correct estimate?
absolutely. Close to about 70% of our P&L for the next 2 years' time, for FY24 and 25, will come from the sales which has happened in the last 3 years' time or last 2 years' time. So that's a very, I mean, predictability on the P&L which is there, predictability on the cash flows which are there. There is a good growth momentum which is happening now.
Okay. Is the underlying demand uh, reasonably strong enough for you to be able to predict this confidently, part one? And is it only a volume-based growth that you would do, or would you reckon that the blended realizations will move up? Because as I saw, Q1 blended realizations, I believe, improved from 4,700 odd to 5,500 odd, if I'm not wrong.
Yeah, see, it is a combination of everything. It's just not the volume growth, it's a realization growth. So also when we looked at these numbers, we have looked at only the projects which are already in our portfolio. We have not taken any projects which are to be added. So again, if you look at the pipeline, whatever we are projecting now, we take up only the projects which are already with us, fully funded, either approvals are 100% there, or I mean almost 80-90% is there. There is no uncertainty linked to it. So there is a clear visibility of next 3 years growth. With respect to the consolidation on the revenues growth and as well as bottom line, it is combination of everything. And the market, there is a huge demand today, and I mean people are buying as if there is no tomorrow. And will it continue? Yes, it will continue for at least next 5 to 7 years is my view. Will it continue in this across sectors? I don't have an answer, but it will certainly continue on the mid-market segment for the next 7-8 years comfortably. That's where, as an organization, we have positioned ourselves to be the dominant player in mid-market segment. So that's where the growth is likely to be at least 7-8 years consistently growing, both in terms of volume and as well as the price realization. So that's a big advantage we are riding on.
Got it. How important and crucial is this property? The ASK Property Fund believes signing 2 projects, 2 more are expected. There is some investment platform through which this is happening. Can you explain this? And would you do more with ASK, or are there other funds in the offing? And is there a differentiated business model here, or is it that they will pick up a part of the equity of the project and that's how the partnership will be?
Right from the day one, Shriram Properties has grown only through partnerships. We never looked at land banking. We never looked at land aggregation. Right from the day one, we only looked at how do we grow ourselves through partnerships, either through joint developments or joint ventures or third-party equity. That's how we have grown. So ASK is a platform we have set up. It's a 500 crore platform. ASK again is backed up by Blackstone now. So a 500 crore platform we set up. 2 investments have been done so far. We set up this platform, I think, in early this calendar year, I think February. The first investment has happened in the month of March. Second investment has happened last month or in June. So August we have had the second investment. So the 500 crores will get consumed soon. So this is not the first one. ASK, we have already done one project which is completed, delivered, and they made very, very decent return. So it is not only ASK. We have been working with the various partners, right from Sandapolo to Waltham Street Capital, Starwood Capital, TPG, Tata Capital, Mitsubishi, Motilal, Kotak, CDC. I mean, you name any top names in the country who have interest in India. So they partnered with us, and the partnership has been extremely flourishing. And all the partners, irrespective of what are the returns they made, they are extremely happy with us because of the way we conduct our business, the way we do our governance, the way we get them involved in this business. So I'm looking at excellent growth again through partnerships for the future also in line with whatever we have grown in the past.
Are any of these partnerships with funds that you're doing for building out annuity commercial projects, or is it largely residential?
Mostly residential. We have only one commercial development which has been completed in Chennai. We developed and sold it to Xander Fund. So again, another large fund I mentioned. I missed out mentioning. The Xander supported by APG and Texas Teachers Fund. So we developed a large office space in Chennai and sold it to them. it was a forward sale. We sold it to them. We did a development management with one portion we have developed and sold, other portion we did development management with Xander. Otherwise, we don't do annuity income. Our primary focus will be mid-market housing. So again, Prime Minister has talked about housing for all in 2016. My memory is right. So, and government mission is to make sure that housing for all. In fact, somebody else was mentioning, one of the private equity investors was saying that post-independence, India was talking about roti, kapda, makan. So now people forgot in this digital world, roti and kapda. They are looking at, makan is the first one. Along with that, digital space is the second one. Then third, roti and if possible, kapda. So that's where the world has changed today. Particularly this next 3-4 years time, I'm looking at there's only competition between whether it's a home or digital space. So these two will be competing. Roti and kapda has taken a backseat. So it is our responsibility to make sure that we also contribute in the mission of Prime Minister in housing for all. But I don't think we'll be able to contribute a lot towards affordable housing and economic section because environment is not conducive enough for business houses to do it. But mid-market segment is the next one, which is the need for urban cities today. That's where we continue to focus.
Okay. Would you be able to execute all the plans that you have with internal approvals, or would you need to raise some debt, or would you need to monetize some non-core assets? Because there is this note which talks about you in the final stages of selling a part of the land parcel, if I'm not wrong, that you have in Kolkata.
Yeah. So it is it is something to do with our DNA. As a person, personally, I never wanted to borrow money. My father told me when I wanted to buy my first home, so he told me he will not borrow money. I said it's going to help me in taxation, a home loan will help me in reducing the income tax and all that. He said, all that I understand, but he's a teacher. He said, you should not borrow money. If you can, use your own capital to buy home, it is fine. Otherwise, if there is a shortfall, I will support you. It's your choice, but you will not borrow money. So it is something to do with DNA. As an organization, we never wanted to borrow money. So we'll not look at growth through borrowed capital. Again, in real estate, whatever you get into it, it could become a real long-term asset. Whereas in India, long-term capital is not available too much. It's all short-term capital, whether it's a debt or any form of instrument. If you take that money with a pressure on your head and you invest into long-term, you are likely to get in difficulties. So that's where some good developers got into serious difficulties, which right from the day one we decided we will not do this. Having said that, for the working capital, we take construction loan wherever the energy gap. So very, very small one. Hence, we will not look at growth using borrowed capital. We will look at growth either through internal accruals or third-party equity like ASK, Mitsubishi. There are quite a lot of partners we have been working with. So they will, Mitsubishi, the only relationship in India in real estate development is the best. And they are extremely happy. And they did so much diligence for 5 years, finally decided to partner with us. So it's a very large name, Japanese fund. So we have got good partnership, good partners. So through partnership, we look at growth. Internal accruals are good enough to look at the growth. Having said that, we have got, about net is about 400 crores. We want to bring it to about 250, 260 by FY24 end. That's a constant endeavor, but still, we'll never become net debt free because working capital will always be there. But our endeavor is to keep on reducing it. This is one side. On the other hand, we have, one asset in Kolkata, which is a very large township. So the township, for you to develop 100%, it could take longer time. Hence, we thought we should monetize part of the asset. So part of the asset we should develop. So we have put a program for monetizing the part of the asset. That should happen, hopefully, this year, partly it should happen. It is not only one-off. Maybe in the next 3 years' time, we will be able to monetize. Whatever the monetizable allocated land portion, remaining portion will develop.
So by when would this happen?
Hopefully, one monetization should happen before this year end.
Before this financial year end, you mean?
Yeah.
Okay. And sorry, when I heard you say one monetization will happen, is there some other monetization also in place? Sorry if I've misunderstood.
Yeah. See that Kolkata project, which has about 314 acres land. It's a very large township land. Out of which about 60 acres is under development. We are doing about close to about 5,000 plus homes under construction now. Some of them are delivered, some of them are under construction now. So the development will continue. So we have marked about 10 million square foot for our own development. The remaining land parcels or FSI, equivalent FSI will monetize. So that monetization program will take place over the 3 years time. The first leg of monetization program should get concluded this financial year.
Okay. And just wondering, what is the ballpark numbers that you expect from this? I heard you say 360 acres. Out of that, you're probably developing 60 acres. So would you sell off remaining 300 acres, 200 acres? How would it be? And what is the kind of amount that you anticipate?
This is about 314 acres. It's not 360, it is 314. Out of which about 60 is under development. So remaining land parcels are available, which we'll look at monetizing. One portion, we are in discussions with, few people, about 60 acres of land. We are in discussions. So that should get monetized during this financial year. And the rest will take place maybe in the next 2 years.
How much do you expect from the 60 acres sale only?
I don't think I can disclose the number now because still NDA is signed with the potential buyer.
Is there a bare minimum that you want from this? Sorry, I don't want to pry too much. I mean, it's sensitive information, but is there a bare minimum sum that you anticipate from this?
Yeah, we are likely to get some.
Okay,
we are likely to get some good sum.
No, I understand. Okay, just one last question. Is there any other land parcel, asset, etc., that you might be in a position to sell?
No, we don't have anything. We don't own any land bank. As I said, in our entire portfolio, see, as I said, right from the day one, we looked at growing through only partnerships. So we started with joint developments and joint ventures. Then nicely we moved into development management. We are a pioneer in development management today. Close to about 34% of our portfolio. We have a portfolio of about 53 million square feet. 34% of our portfolio comes under development management. So it's a completely asset-light model. We don't own asset. Kolkata is one asset which we started with joint venture, ended up owning their asset. Chennai, we have another asset. It's a very small asset, it's about 700,000 square foot potential. So that also we will either develop or monetize soon. Other than that, we don't own any assets. It's all either through joint development or joint venture or development management. And then either we are looking at getting an asset.
Okay, so Kolkata is one, you're doing piecemeal sale over 3 years in different shapes and forms. And there's an asset in Chennai which you might sell or might develop. You're not sure of that as of now.
Yeah.
Okay, fair call. Okay, great. Wishing you all the best for all of these plans, Murali. Thank you for taking the time out and speaking to us. And lovely having you.
Thank you, Neeraj. Thank you.
And the pleasure is ours. Viewers, thanks for tuning in.